Okay, be honest. Have you ever scrolled through those amazing houses online and thought, real estate, now that's how to build wealth? But then, reality hits and you remember you're not exactly sitting on a gold mine to buy a whole apartment complex.
You're preaching to the choir.
Good news is you don't have to be. That's what we're diving deep into
I'm
today.
with you. Let's do this.
We're proving that real estate investing isn't just this exclusive club for the super rich. You sent over some really interesting research on this, and, well, it turns out there are some seriously clever strategies out there, even if you're working with a shoestring budget.
What really jumped out at me from all these sources was how they kind of flipped the script on what real estate investing actually means. Like, it's not just about owning a bunch of property outright. It's more about, understanding how to use the system to build your wealth no matter where you're starting from.
All right, pillar me intrigued. So how does this using the system actually work? Where do we even begin?
Let's kick things off with an approach that actually takes a major expense, like a huge chunk of your budget, and turns it into an investment. House hacking.
House hacking. Okay, I got to be honest. That always sounds kind of intimidating, like I need to be some sort of tech genius to hack the housing market.
No, 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 not at all. It's actually a pretty simple idea. Picture this.
Hmm.
You buy a duplex, maybe a triplex, you live in one of the units, and then rent out the others.
Okay, so I get the landlord part, but where's the hacking come in?
The hack is your tenants are basically covering your mortgage. You're living rent-free, or pretty darn close to it. And here's the kicker. One of the sources, a study about building wealth over the long term, found that house hackers build up equity way faster than people who just rent traditionally. They're getting a head start on the property ladder without needing, a mountain of cash for a down payment.
So it's like putting your savings on a fast track, but instead of just stashing cash in a bank, you're actually building ownership in something tangible. That's a pretty sweet deal, especially with how much rent eats into most people's paychecks these days.
Exactly. But it's not just about the money. Being a landlord, even on a small scale like this, it gives you real world experience you can't get anywhere else. You learn about managing tenants, dealing with repairs, handling those unexpected things that pop up. And those are skills that, traditional investors often end up paying a lot for later on.
It's like a crash course in real estate, but instead of tuition fees, you might actually be making rental income. Not a bad trade-off at all. But I got to be honest, the whole landlord thing, even for just a couple units, it's not everyone's cup of tea. What about those of us who like the idea of real estate investing, but aren't quite ready to start, handing out eviction notices or whatever?
Well, that's where things get even more interesting. You can actually tap into the real estate game without being so hands-on. One way is this strategy called wholesaling.
Wholesaling. Okay, now we're really venturing outside my comfort zone. What's that all about?
Think of it kind of like being a real estate matchmaker. You go out there, you find these hidden gem properties, the ones that are underpriced, or maybe have a seller who's really motivated to sell quickly. And then instead of buying the property yourself,
Wait, hold on, back up. I don't buy the property. Then how in the world do I make any money from this?
that's the ingenious part. You find a buyer who's ready to pay a premium for that sweet deal you found, and you connect them to the seller. You're essentially the one in control of the deal, not the actual property. Your profit comes from that fee you negotiate for being the one who brought everyone together.
Okay, that is seriously clever. It's like being a real estate agent, but instead of just showing places, you're the one digging up those off-market treasures. But these sources, they made it clear, this isn't just about lucking into a good deal. You need some serious knowledge to spot those diamonds in the rough, right?
Oh, absolutely. Wholesaling, it takes a deep understanding of your local market, being able to analyze deals on the fly, and some pretty strong negotiation skills so you can make sure both the buyer and the seller walk away happy. You got it. It's not for the faint of heart. But if you love that kind of, treasure hunt thrill and you have a knack for spotting a deal, it can be really, really profitable.
Just to be clear, this is actual profit, right? Not just like, oh, hey, I found you a great deal. Maybe you'll send me a fruit basket.
Right. It's your fee, your profit, and the best part, you don't need to be rolling in dough to buy the property yourself. It's really all about leveraging what you know and how well you can work a deal.
I'm with you. So you're kind of like a real estate entrepreneur, finding those opportunities, making the deals happen.
That's a great way to put it. And speaking of entrepreneurship, there was another strategy that really stood out to me from these sources you sent. The BRRRR method. That's buy, rehab, rent, refinance, repeat.
BRRRR.
Yeah.
I get it. Clever. But, okay, before we get too carried away with a catchy name, could you break that down for me?
It's actually a pretty brilliant system. You find a property that needs, a little TLC, maybe a fixer-upper, something below market value, but with a lot of potential.
Hmm.
And then you put in some sweat equity. Basically, using your own skills, maybe you hire some help to renovate the place, increase the value.
Hold on, hold on. Sweat equity. Is that where the BRRRR comes from? Sounds like things are about to get interesting.
You could say that. It definitely takes work. But on the flip side, it can really cut down on your initial investment. Think of it this way. You're basically using your own time and skills instead of a huge down payment or tons of cash for renovations.
Right, so I'm trading some elbow grease for a smaller upfront cost. I'm
Mhm.
following. So I bought the fixer-upper, I put in the sweat equity, and now I've got this beautifully renovated property. What happens next?
Now, the fun part. You rent it out. The rental income that covers your mortgage, and ideally, it's even generating some positive cash flow. And then here's where it gets exciting. You refinance. Because you've boosted that property value, you can refinance for a higher amount and potentially pull out some of that equity you've built.
Wait, so I get some of my initial investment back, but I still own the property,
Yeah.
and it's making me money through rent. This is blowing my mind a little.
You got it. And then, you guessed it, you take that money and you do the whole thing again with another property. Buy, rehab, rent, refinance, repeat. It's a way to really scale your portfolio, potentially make it grow super fast, all by using leverage and that equity you're building.
I can see why this one gets people fired up. It's like real estate becomes this game where you can level up your portfolio. But I'm guessing this BRRRR method, it probably takes a certain personality type, someone who isn't afraid of a little or a lot of risk.
You're right. It's not exactly a passive strategy. You need some capital up front for the initial purchase for those renovations, and then you got to be ready to manage those contractors, find good tenants, and handle the whole refinancing process.
Definitely not as simple as clicking invest on a website. Which, speaking of which, we talked about house hacking, we've covered wholesaling, and now this whole BRRRR method. Those all require, getting your hands a little dirty. These sources you sent, they also mention some options for people who'd rather take a more, let's say, hands-off approach, right?
For sure. Real estate crowdfunding platforms have really blown up lately, and it's not hard to see why. They let you invest in all kinds of different real estate projects, and get this, the minimums are really low. We're talking sometimes as low as $500.
Seriously.
Yeah,
That's less than some people's rent. Okay, yeah, I see the appeal. It's like testing the real estate waters without needing to dive headfirst into a full-on property purchase.
you got it. And a big plus, which came up in a lot of these sources, is diversification. Instead of putting all your money into one property, you're spreading it across multiple projects. We could be talking residential, commercial, even things like storage units.
So even if one of those investments doesn't work out, the potential gains from the others, they can kind of balance things out. That sounds like a pretty solid way to manage risk, especially for those of us who aren't like real estate moguls, or at least not yet. But before we go too far, we got to talk about another one of those terms that always throws me for a loop. REITs. Every time I see that, honestly, I just think REIT tired because wrapping my head around them just makes my brain hurt. Can break it down, make it make sense.
Let me try. Okay, so REIT, that stands for Real Estate Investment Trust, and I promise they're a lot less scary than they sound. Remember when we were talking about crowdfunding, how it lets you invest in those different real estate projects?
Yeah, kind of like shared ownership, right?
Exactly. Well, REITs, they're similar. But instead of putting your money into a single project, you're actually investing in a whole company that owns, operates, or finances income-producing real estate.
Okay, so instead of owning like a tiny piece of a shopping mall, I own a tiny piece of the company that owns a whole bunch of shopping malls.
You nailed it. And here's another cool thing about REITs. They're publicly traded on the stock market. So you can buy them and sell them just like regular old stocks.
That's like an
Yeah.
easier way to get into commercial real estate without, needing to liquidate my entire life savings to buy a skyscraper. I like it.
That's the idea. And another perk, REITs are actually required by law to pay out at least 90% of their taxable income to shareholders through dividends.
Dividends. Okay, that's my kind of language. It's like a
Uh.
bonus just for being invested. So if crowdfunding is like dipping a toe into real estate and owning a rental property is like diving headfirst into the deep end, where do REITs fall on that spectrum?
I'd say REITs are like wading into the shallow end of the pool. You get that exposure to the market, the potential for some passive income through those dividends we talked about, but you don't have to deal with the day-to-day hassles of actually managing properties.
Okay, that makes sense. So far, we've got options for people who like to roll up their sleeves and get involved, options for those who want to sit back and watch their money grow, and then everything in between. This is starting to feel a lot less like members only and way more like an open house. But before we wrap things up, those sources you sent, they mentioned a couple more strategies, and I'd love to get your thoughts on them, especially with how crazy the lending landscape is these days. One that really stood out to me was seller financing. What is that exactly?
Seller financing, it's a different approach where the person selling the property, they actually act as the lender. They're basically the bank. Instead of getting a traditional mortgage from, a bank or a lender, you're making your payments straight to the seller based on terms you both agree on.
That sounds shockingly simple, almost too good to be true. What's the catch?
Well, real estate and finance, they always come with a few twists and turns.
Of course. There's no such thing as a free lunch.
Exactly. And one thing with seller financing, it's not always easy to find sellers who are open to it. It's not as common as the usual mortgage route, and it takes a certain level of trust on both sides. But there are definitely situations where it can be a win-win for everyone.
The research you sent mentioned something about this being a good option when traditional financing is, well, let's just say less than ideal. What's the deal with that?
Right. So seller financing can be a really good option for buyers who might not tick all the boxes for those conventional lenders. Like, imagine someone with a credit score that's seen better days, or maybe someone who's self-employed, and proving their income to a bank is like pulling teeth. Seller financing can be that open door to homeownership that they might not have had otherwise.
It's like finding a detour when the main road is totally jammed, a way to get around those roadblocks.
Exactly. And sometimes seller financing can actually be the better deal for the seller too. Like, they might be able to get that property off their hands faster, maybe even for a better price. Plus, they often get some nice tax advantages from those installment payments they receive over time. It's not a one-size-fits-all solution, but it's definitely a tool in the toolbox.
I'm with you. It's like you said earlier, it's all about being resourceful, understanding the different options out there. And that's what I appreciate about these deep dives. They challenge those old assumptions that you need to be rolling in it to even think about real estate.
I agree. Real estate doesn't have to be this members-only club.
Not at all.
And the more you learn about the different ways to play the game, the better equipped you are to find the strategy that works for your situation.
It's like we always say, knowledge is power. So for someone listening right now who's feeling that spark, ready to jump into the world of real estate investing, what's the most important thing to remember?
That's a great question, and it's actually something we touched on earlier. Real estate, it's local. What flies in one city might not work in another. So yeah, understanding these strategies is huge, but don't skip the research. Dive into your local market. Talk to people who've been there, done that.
Think of this deep dive
Yeah.
like the initial push, the inspiration to get the ball rolling. But just like any investment, you got to be willing to put in the work.
I'm with you 100%, because at the end of the day, informed action, that's the secret sauce to making real estate work for you.
And who knows? Maybe down the line, we'll be the ones comparing notes on our amazing real estate portfolios.
I'm holding you to that.
You've been warned. But seriously, this has been fantastic. Thanks for joining us for another deep dive. Until next time, happy investing, everyone.